Hi, I'm Tom Lydon, editor of ETF Trends here in Chicago at the Morningstar ETF Invest Conference. And I'm here with Brendan Ahern, Managing Director of KraneShares. Now, you folks are a unique new ETF provider specifically focusing on China. Tell us a little bit about it, because there are a lot of China-related ETFs out there, but you go at it a completely different way.
No, thanks again, Tom, for this opportunity. I think the first thing we've done is we've partnered with China Securities Index Company. CSI is the largest index provider in mainland China. And so we like their approach of, they view Chinese stocks are either mainland, which means you're listed on the Shanghai or Shenzhen exchange, or you're overseas. And overseas incorporates all of the exchanges where Chinese companies can list shares. That could be Hong Kong, it could be NASDAQ, it could be the New York. So a company like Baidu is listed on the NASDAQ. It's really the Google of China.
Yeah.
It's not in a lot of China indices because of where Baidu has chosen to list. So first and foremost, we like China, CSI's approach of you're either mainland or you're overseas. And all these different Chinese share classes, we call it the alphabet soup of China, red shares, A shares, B. It's just CSI cuts through the clutter. So that's the first thing.
So you get right to the core of China, where you're saying some of the competition out there kind of has to pick and choose because you may not have that whole universe to choose from?
Exactly, that some ETFs use indices that are built on you being a H share, so a Chinese company listed in Hong Kong, or a red share, which means you're excluding companies like Baidu and Ctrip, you're really the Expedia of China, just because they happen to list here in the United States. So we like that holistic approach. And some of these are very big companies. I mean, Baidu is a multi-billion-dollar market capitalization. It's not in the biggest China ETFs because it's chosen to list in New York.
So not only that, you really focus in the tech area. Is that right?
Yeah, we've got two funds, and maybe starting with our first fund, it's the China Securities Index 5-year plan. So the 5-year plan is the Chinese government, going back to the early 1950s, has this top-down driven economy. And working with CSI, we wanted a way to make, where is China going? And the 5-year plan very intuitively tells you where the Chinese government is going to invest literally hundreds of billions of dollars. And so CSI was able to back into the 7 focus industries into sectors and subsector exposures. And so technology is definitely a big part of that.
Yep.
I would argue part of technology is really e-retailing. And in China, they're jumping ahead of us in various stages as they adopt technology or what have you. And so there's never going to be a Circuit City or Best Buy of China. It's all going online.
Yeah.
They're never going to have that big box stores. So a lot of
They're moving right past it.
They jump ahead. I mean, it's very logical. So technology is a big part of the 5-year plan, and we own a lot of those names. We also own healthcare, clean energy. Domestic consumption is a big part. I mean, overall, China recognizes they are export dependent, and they're really dependent upon the US and Europe. So they want to reorientate their economy a little bit away from export dependency and more around domestic consumption and really raising the well-being. So these are super tanker trends. It's not going to happen overnight. But we're there. We feel you've got a new leadership regime came in March of this year, and if you read what the new leaders are saying, they're really talking about the sectors within the 5-year plan, and we own those sectors.
So you've got 2 ETFs. Any plans for more down the road?
Yeah, I think we want to create products pragmatically. That as like yourself, I've been in the ETF business a long time, and I think you want to launch products knowing that there's going to be demand. So we like the 5-year plan because we know for strategic buy and hold allocators, we think it makes a lot of sense. And then we've got a pure play China internet company, which is really for more of a tactical, it's going to be a higher standard deviation. I think very logically, fixed income is an area we'd love to produce some products. Just the yield curve difference there versus here is very appetizing, as well as you can get some of the appreciation of the currency. And broader, we feel China is opening up, and so there could be some opportunities within the mainland markets. It's not going to happen overnight. but it's going to happen, and so we want to be there, be prepared for that.
Great. Well, Brandon, thanks for spending some time with us. I really appreciate it.
Thank you, Tom.
And we'll catch up again soon.
Sounds good.
All right,
Thanks
take
again,
care.
Tom.